Hello and welcome to the CD Networks webcast, Reaching China with Your Website and Cloud Application, The Hard Truth. I would like to introduce Jerry Miller, CD Networks VP of Technology.
Hi there. Thanks for taking the time to view this webinar. So just to give you a little bit of background, there's always been a lot of interest in China. Certainly China is recognized as one of the key emerging markets for online properties, huge consumer base. Much of it is increasingly going on to the internet. However, a lot of the focus has been on the business benefits and not so much on the difficulty in terms of actually being able to implement to get those business interests. So what we're trying to do here is educate you on some of the more tangible complexities to accessing that market. First, a little bit about CD Networks in terms of why we feel well suited to be able to provide this type of information. CD Networks, here at CD Networks, we have spent a lot of time building a true global cloud acceleration network, specifically focused on application delivery and transactional websites such as e-commerce, learning management systems, things of that nature. By focusing on emerging markets as well as the developed countries, we have a true global market and true global expertise that allows us to speak particularly well to areas such as South America, Russia, and China in particular. With over 100 POPs spread globally, you can see that we've spent a lot of time and effort focusing on these key emerging markets, and we continue to add more POPs in these areas and developing more associations with regional partners and deeper insight into the regulatory as well as the on-the-ground complexities. In China in particular, we have 24 POPs. I will talk a little bit more about why it's necessary to have so many POPs for a country that's roughly the size of the United States. I will make the assumption that most of the audience members are familiar with Western, that is United States and Western Europe type topography and internet issues, and I'll use that as a baseline when I talk about China. So as a result of this, we've truly become experts in getting companies into the Chinese market. We have been working with China since 2006. We have local, not only a network office, but also a sales and support office in China. We have our own POPs with our own hardware and software in China itself. As a result of that, we've had to become experts on the regulatory, all of the regulations necessary for the Chinese government, as well as interacting with the Great Firewall, and we'll talk more about these later. And as a result of focusing on application and web performance, it's put us in a unique position to really leverage our Chinese knowledge for helping companies get sites into China. So some of the customers that we've been working with, this is kind of a little bit of a logo chart. I'll kind of skip through to the agenda. So the agenda for this webinar is to talk a little bit about the opportunity, but really to focus on the implementation aspects. We'll start with network latency. Again, I will use the U.S. market as a baseline for a lot of the conversation. We'll talk about peering and why it's necessary to be concerned about peering at all. Go into a little bit more for our performance data. We'll talk a little bit about regulations and navigating the IP filters in China, and then I'll finish up with some case studies. So first, let's talk a little bit about the opportunity. I think most folks on the call will understand this chart very well. We have the developed countries on the left, some of the emerging markets on the right. You can see that the numbers are, the penetration numbers are very high, which is good. On the right-hand side, you can see the population figures as well as, or not the population figures, the internet population figures, as well as the relative penetration. And not surprisingly, China has a very large population, which means that even with low penetration numbers, they have a very large internet population. And that creates a very strong candidate for growth. Another data set shows Asia as not only one of the largest internet users by total count, but it also has one of the lowest penetration numbers. So again, lots of room for growth. And in Asia, you can see that China, by far and away at the top, with not only the number of current users, but again, a large candidate for growth. So relative to India, which has also a large number of users, you can see the penetration numbers are quite a bit smaller. So China is very much on that hockey stick of poised for significant internet growth. And you can see that here. They've been adding over 100 million users a year to the internet for the last 5 years. One of the challenges that we'll be talking about is that in spite of having all of these internet-enabled users, that they are a lot of slow connections. You can see that they passed the 1 billion mobile subscription count, but only 144 million of those are 3G. So that means that the vast proportion of them are still using 2G networks. Many of the people on this webinar, and certainly that have heard this conversation in the past, can barely remember their last 2G phone. Whereas in China, 2G is very much the reality when you talk about mobile. For fixed line subscribers, they're barely over 50% in terms of broadband. And even that broadband quality is going to be not quite what we're used to in Europe and the US. So what that means is, as much as we talk about improving website performance for Web 2.0, Web 3.0, high interactivity sites, lots of rich media content, when we talk about improving the web experience, we're talking about moving more and more content to the user and improving that interactive, customized experience. In China, the user patterns there are different due to a large part because they have to be more patient with their connection. They have to be more patient with the sites, but even that patience is going to be dwindling over time. One need only look at the sort of tolerance for slow sites in US and Europe over the years to predict where China is going to be headed. And as a result, speed of download for sites, speed of interaction for transactions is just as critical in China, if not more so, because of the handicaps due to the connection. And it's probably not a surprise to anyone on this call, slower sites have been proven time and again to directly correlate to lost revenue. CompuWare did a study showing increased page times leading to increased abandonment. Aberdeen as well showed that you get fewer conversions, fewer page views. So in spite of the direct correlation between slower sites and fewer users and fewer revenue as a result, the expectations, and again, this survey was taken principally in the West. You can see that the tolerance for slow sites has been getting less and less, such that 88% of consumers will not return to a site after a bad experience. Now, of course, the surveys have also found that people will return at a very later date, but one can only hope that they haven't found a substitute for your site in the process. So let's start talking about some of the actual aspects that affect your implementation. Let's start with network latency. This is a very straightforward theoretical chart. Throughput inversely proportional to round-trip time and square-root packet loss. We're not going to talk as much about packet loss. We will talk about it indirectly when we talk about peering. Packet loss, because it is such a moving target, is very difficult to correlate from that regard. So in this particular section, we're going to spend a fair bit of time on round-trip time. In the West, really the sweet spot that we're talking about is this 30 to 100 milliseconds. So this is the distance between where the client is and where the server that he's trying to get content. And about 30 to 100 milliseconds is not entirely unreasonable. Certainly you can get a little bit farther than that when you try and cross the pond to Europe from the US and vice versa. As well, certainly you can get much longer than that if you try and go into South America, Australia, etc. But for the most part, if you're staying in the developed world, meaning U.S. and Europe, 30 to 100 milliseconds is a pretty good sweet spot. But even that results in about a 70% reduction from your best users to some of the users who might be a little bit farther away. Well, the problem is when we start looking at average round trip times in the emerging markets, is that we're not close to the 30 to 100 milliseconds. We're really closer to 100 to 300 milliseconds. And you can see here that now we're getting to the point to where the maximum throughput, and again, this is before packet loss, and this is before any type of other delay factors, it really starts to impact the user experience. So in China, when we start talking about round trip times, we're really in the 50 to 200 millisecond times, and that's assuming that you're already using a CDN, you're already doing a lot of the kind of web performance improvements that are so often talked about. So another way to look at this chart is taken from an origin in Washington, D.C., so on the eastern seaboard. You can see that the times increase as you get farther away. It's kind of a general understanding that the site performance is going to degrade as the distance increases. So kind of making the logic flow for that, it's more distance, more latency, round trip times get longer, the downloads get slower, and as a result, your page loads slower. And so you can see that going from Washington, D.C. to the eastern side of the U.S. to central U.S., it's roughly 3 times slower. You get to the West Coast, it's 5 times slower. You cross the pond over to London, you're around order of magnitude slower. Tokyo is about 14 times. And then when the first entry point into China, in this case is Shanghai, you're 30 times slower than you were for a user situated in Washington, D.C. And perhaps surprisingly, Beijing, the capital of China, is the worst data point. This is data that was taken with CompuWare's Gomez platform, and you can see it 50 times slower. You've long since exceeded the patience of any of your users. So take it another way, again, start correlating this with things that we're probably much more familiar with. One of the convenient things about China is that it's roughly the size of the U.S. You can see the overlay here. And so when you take 2 data points that are probably a little bit more familiar, New York to Miami, so along the eastern coast of the U.S., it's about 1,100 miles. On par, you can get about 26 milliseconds, give or take 20 to 30. That's roughly the distance between the capital of China, Beijing, and Guangzhou, which is a stone's throw from Hong Kong. So roughly about the same distance, roughly about the same latency. So for the most part, we're talking about, we could believe that we're talking about apples and apples here. We go to the population centers, and we can see that the vast majority of the high-density producing areas are along the east side of China. And as a result, when you look at China, you really need to be focused on the eastern seaboard. So again, roughly the distance between New York and Miami is the area of concern that you want to be focused on. So correlating this to latencies. So this is taken from our POPs to our other POPs, backbone latencies as they're referred to. This is coming from New York City. You can see that as you go further west, the distances increase and the latencies increase roughly at a pretty close correlation. So for the most part, you can plot distance and to a rough scale have a good idea what the latency figures are going to be. Well, unfortunately, China doesn't work that way. And we'll talk about some of the factors leading to this, but you can see Beijing at the red in the upper right-hand corner. We have a number of POPs in Beijing. 2 of them are listed here. One of them is 1 second away, which is 1 millisecond away, which is to be expected. The other one, ironically, is 122 milliseconds away. So even though the POPs are using the same ISP, you can see that the routing itself is not as straightforward as one would think. As a matter of fact, some of our highest latency numbers are immediately adjacent to Beijing, and some of the sort of more expected numbers you see as you get farther away. So this goes into one of the primary challenges that we find in China, which is that it isn't always connecting to the same ISP that will get you the best coverage. It isn't always being geographically nearby that will get you the best performance. That there are a lot of other factors involved. And again, peering plays a large part into this. So one of the things that we see a lot of is that companies decide that they want to try and access China from outside of China. Well, it's a good point to understand sort of where are the best entry points into China. And certainly I think everyone is aware that Hong Kong is geographically near China. And so that, of course, is one of the key entry points. But you also have choices in Tokyo, in Seoul. There's actually a line that goes directly to the U.S. and another one that is being improved going to Europe. But for the most part, I think most people have found out the hard way that serving content into China from Europe and the U.S. directly is not really a strategy for success. So, one of the other 3 points, and there are other entry points into Vietnam, for instance. There's another one going down into Indonesia. But as you can see in the next slide, the latency numbers are not going to be as realistic. The other thing to keep in mind is that The other thing to keep in mind is that Hong Kong is not in the Great Firewall. So one of the things that you do need to be aware of is that Hong Kong is not peered the same way, nor is it connected internally to China the same way that you would expect as any type of data center on the other side of the Great Firewall. We'll talk a little bit more about that as well. So here are the type of latencies that we're seeing. Again, this is going from our POPs to our other POPs. So these are actually optimized links. We spend a lot of time as any CDN to optimize our between POP networks as well as from our edge POPs to end users. You can see in Tokyo and Seoul, we actually have a number of POPs in Japan and Korea. Our best connected POP to Beijing is around 17 milliseconds in Tokyo, but our worst connected one is 185 milliseconds. So again, one would expect little to no difference, and yet we see a high range of latency. Similarly, Seoul, which is about half the distance to Tokyo, we find even worse numbers. Best performing data center is at 30 milliseconds, with our worst one almost at 10 times that. And so you can see going down into Taiwan, Hong Kong, the numbers are fairly reasonable, but as soon as you get outside of that range, you start talking about India, Malaysia, Thailand, the numbers decrease precipitously. So again, very difficult to predict what latency figures are going to be strictly based on geography. And so that kind of leads us into peering. Peering is something that probably many of you have never even thought to be concerned with. For the most part, if you want to serve the United States, you can drop a POP on the East Coast and reasonably serve most of the East Coast fairly well. Certainly companies like Amazon have made a good business doing just that. If you want to serve Europe, Western Europe, for the most part, you can put a POP pretty much anywhere in Europe and have a pretty decent coverage for all of Western Europe. You don't need to think about what ISP you plug into. You don't really need to think about where the POP's located. For the most part, your concerns are going to be based on economics. Well, in China, you very much have to be concerned about peering. So here are the 6 major networks in China. We have the major landline ISPs, China Unicom and China Telecom at the top, with certainly nearing half a billion lines each. China Mobile is the gorilla in terms of the mobile market. You also have CERNET, which is the China Education and Research Network. This one is vital for companies that are trying to access the university students, research staff, things of that nature. We get a lot of interest from companies that do knowledge repositories, learning management systems, and CERNET is absolutely the network that you must plug into. Again, greater than 20 million scholars, but again, the number is fairly old from CERNET, so it's difficult to predict where that is, but one can assume that it is well above 20 million. However, there's an important footnote at the bottom, which is that this includes 2G subscribers. So again, I'm coming back to this notion of these numbers are great, they're very impressive, but once you remove those 2G subscribers, the numbers become decidedly less impressive. China Telecom with only a 25% reduction in their user base once you remove 2G subscribers. China Unicom nearly in half. China Mobile less than 10%. So something, again, to factor in when we see such impressive numbers from China, you really have to factor in what type of network they're using, what kind of line they're going to get. Because a 2G subscriber is not going to be watching Web 2.0, Western-based, Western-style Web 2.0 highly interactive site coming from the U.S. or Europe. It's just not going to happen. No one's that patient. So why, again, should you care about peering? Because really, if peering works well, and the Internet is largely a network of networks that are peered together, so in a perfect world, everything gets where it's going. It's largely a utility bill. You don't care where your electricity comes from. You plug your socket into a wall, and you get electrons, and things work. There's no loss. You don't have to worry about quality of service restrictions. Certainly, we've had our press about companies trying to do traffic shaping. Those are largely met with a lot of alarm. Things like filtering, deprioritization, congestion, largely factors we do not have to worry about in U.S. and Europe. However, the world is not perfect, especially in China. We talked about some of the suboptimal routing, how it can lead to more latency, the fact that even in the ISP itself, it may not be well optimized. Congestion is absolutely a concern. The ISPs in China are not well peered, and even the peering points themselves are very constrained with respect to capacity. So congestion is very much a real concern in China. And I'll show you a couple of slides to quantify that. The other thing that we'll touch upon and why we have to talk about regulatory at all is because of some of the different factors that are taken into account for ISP filtering, and that can lead to inconsistent results. So a lot of the things that we take for granted, which is basically I throw a packet on the wire in the U.S., that packet will get to Europe in a roughly fairly quickly. I don't have to worry about, for the most part, it getting lost or someone removing it. These are absolutely going to be concerns that we have to worry about in China. So just to kind of throw up a number here, this was a prospect who was actually using a CDN based in China, strangely enough. And you can see at the top the performance was relatively good. So the origin is in red. Not surprisingly, the origin numbers aren't terribly good. The green numbers were what the prospect was using. The yellow was us. So the important thing to focus on this one is the chart below that, which is availability. You can see that the number is around 64%. That's 64%. This is the type of number that is beyond comprehension. Things don't work at 64% availability. And yet, using a CDN that was not well peered in China, this was the type of performance that the prospect was seeing. And as a result of that, not surprisingly, they were getting a large number of customer complaints. They were getting a large number of complaints specifically about your website doesn't work. And looking at a chart like this, it's very easy to understand how that's possible. The part that's beyond comprehension, and when we were talking with the prospect, you make assumptions based on your experience in the West. If I use a CDN in the West, the last thing I would be worried about is general availability, unless there's an outage. So I would expect 100% availability all of the time, unless there were an actual outage itself. In the case of China, as you can see here, this is a recurring availability issue due to either congestion or due to picking basically bad launch points. So again, availability is not something that you can assume in China. This is something you have to test for. This is something that you have to continue to monitor and you have to be aware of. So again, going into China, you have to keep your eyes open. And so take it another way, we monitor between all of our POPs. Again, we're a good services company, so we monitor what we do, keep our eyes open. And you can see that we have 2 POPs in China. One is Shaanxi, and another was in Guangzhou. And at the top, it measures what the maximum pop-to-pop or the highest pop-to-pop error rates are. And you can see at the right that Shaanxi is having 100% loss between itself and Guangzhou. Again, that's taken in one direction. However, if you look at Guangzhou, you'll notice that it goes all the way down to 20%, and Shaanxi is not listed at all. So asymmetrical packet loss, not to mention the fact that it is fairly inconsistent. So again, it's not just good enough to have a POP in China. You have to be very concerned about getting from one place to the other. And these are our POPs where we get to choose the ISPs and we get to optimize the routing, and we still have packet loss like this. So again, it's not enough to have a lot of POPs in China. You also need to have smart routing techniques that are going to be able to route around this, or to use a service that has that type of capability. So let's throw a little bit more data out there. In order to start talking about data, I have to start talking about how we're measuring and how we're gaining, or how we're showing results. Again, I'll be using Gomez quite a bit. I'll also be using another tool that I'll introduce. So this is the type of thing that, of course, we're all trying to do. You can see the green bar at the top, which is the previous performance, and you want to kind of get it down to where the blue bar is. So really what we're trying to do is do this. And there's a couple of different ways to measure it. You can measure it relative to the original time, which gives you sort of a reduction. So in this case, 86% reduction in download time. Or you can do it based on like a speed up parameter that web performance companies like to use to inflate the percentages. That would be the second gain, where you can show a 600% speed up. Whichever way you do, just be consistent. And make sure that you understand the number that is being given to you, whether it is truly a reduction number or whether it is so-called speed up number. So some simple definitions just to make sure everybody's on the same page. When I talk about performance, I'm talking about the time to download something, whether it is a single object or full site. I tried to bias the results more towards full sites because I know that's what everybody cares about. But in some cases that wasn't practical. When I talk about availability, I'm talking about the number of successes versus the total attempts. So 95% availability means that 95 times out of 100 you were able to download the object or the full site. So from a performance measurement standpoint, there are a number of ways to measure performance. I've kind of highlighted some of the characteristics of those. The reason why I'm using backbone agents in this webinar is because there's a much higher degree of predictability between different tests, different test periods, and different scenarios. There's just a lot more predictability with backbone agents. And the other test tool or test service that I mentioned is Network Bench. We found Network Bench to be a very reliable lens of truth for China, principally because they have a much larger number of agents in China itself. At last count, they had 70 backbone agents in China. Correlating that against other third-party services, at best you'll get 5 agents. Most of those will be almost exclusively on the Eastern Seaboard, again, where the people are, but coincidentally, the locations tend to be very well peered, so not exactly representative. Certainly we found it to be not terribly representative. The other good thing about Network Bench is that you can get access to all of their networks, not just the primary 2 landline providers, China Telecom and China Unicom. So this is the type of the 2 different charts. You can see Gomez on the left, and again, big fans of Gomez here at CD Networks. Very reliable tool. Network Bench on the right-hand side. So largely the data is presented slightly differently, but at the end of the day, it's about the number of agents. So same customer, taken with Gomez, taken with Network Bench. You can see that a 16-second performance with 99.2% availability is probably something that can be tolerated. Measured with network bench, you see the numbers are decidedly less optimistic. 25 seconds, 91% availability. Those are, now we're in the realm of non-functional website or non-useful website. So again, a more accurate lens of truth. So on to some data. Did a reference test between inside and outside the Great Firewall. Guangzhou is, in network terms, a stone's throw away from Hong Kong, less than 5 milliseconds. So when we ran some tests, we did single object download. What we found is that using an origin that was based in Hong Kong and an origin that was based in Guangzhou, that we get roughly a 40% slower download time. So again, negligible network distance yields substantially different end user numbers. And these are just some of the representative agents. More interestingly, if you look at the two different landline providers, China Unicom and China Telecom, you'll see that the performance improvement is similar. So it's not a peering issue. It's the fact that regardless of where you're taking your monitoring from, going to either of the major ISPs, the improvement is still relatively similar. And these are the better peered ISPs. Cernet in particular is not peered nearly as well. China Mobile, much less so as well. So mileage will vary, of course, but unfortunately in this case, the mileage will be much worse. So here's another one. This is a full page test using our service inside China versus service outside of China. Most CDNs have, or many CDNs will put presence in Hong Kong or somewhere near China. In this particular case, the closest access point was from Hong Kong, so the majority of the traffic was coming from there, although you will still get some traffic from Seoul and Tokyo as well. And then, again, roughly correlated, we find that if you're only able to come from Hong Kong or outside of China, that the gains are fairly limited. In this case, we were able to do a 67% reduction in download time by being inside versus outside. Of course, we're closer as well, but again, the gains can be significant. So the other thing to keep in mind is that there are much bigger disparities between the CDNs. Again, in the US and Europe, performance tends to be less of a concern, availability less of a concern, because again, you don't need as many points of presence to be able to get good coverage. So the chart on the left is from 3 CDNs that we commonly test against in US and Europe. Best to worst case, plus or minus 40%. In general terms, it's a little bit of a stone's throw. Some people, of course, particularly in transactional sites, will push for more closer to the blue line. People that are a little bit more, cacheable sites or sites that are not as dynamic can probably tolerate a little bit more latency going back to origin and then rely on caching to do most of the work. For China, same 3 CDNs testing in China, you can see that now we're talking about an order of magnitude. So now we're in the realm of is the site usable versus not usable? It's a very different type of discussion. So we do end up working with a number of prospects who come to us saying we're using a CDN, ergo our performance in China should be at least acceptable. It's always very interesting kind of showing them some numbers. And again, these are using CompuWare's Gomez agents, so much fewer of them, and tends to provide a slightly more optimistic view of performance in China than using network. Actually, it's usually significantly more optimistic than using network bench. So yes, in case anyone had any questions about that, faster sites do in fact work better. This is a social gaming customer that we went live in China in February. You can see that they had roughly a 4 times increase over organic traffic in 6 months. We had another example, electronic manufacturing customer. Probably not surprising. A lot of people don't like publishing numbers like this, so it is difficult to get them to agree. But this is real data from our systems that show us adding the China service on February. Again, roughly about a 3 times increase in traffic. probably one of the more interesting things, and something certainly that to be aware of, is that going into the China market, you have to be, to a certain extent, braced for success. I know that a lot of the participants on this call are more on the IT side, less on the business side. So, we need to be prepared for worst case scenario. In the IT space, worst case scenario is more users you can handle, exceeding capacity, and basically shutting down your application or website as a result of that. Do go into China with your eyes open. In this particular case, from a business standpoint, the mobile gaming customer had decided to dabble in China, and they found that once they actually improved their China traffic, that it grew to start dominating their business model. You can see here they went from 25% to 38% of their market in just a few months. So, to some extent, you need to go into China with your eyes open from the business standpoint as well. So just to throw up waterfall comparisons, this was an e-commerce site that we did a download test for. You can see the waterfall on the left versus the right. So one thing that we'll talk about a little bit is third-party content. So even if you move your site into China, you still need to be concerned. If anything, you need to be hyper-concerned about any off-site linking. In this particular case, it wasn't that much of a casualty. You can see the longer orange bars are basically the third-party content, and you can see on the right-hand side that things like DNS lookup times start to become more problematic as you get farther away from where those sites are served from. So transactions, here's another common launch point or perceived launch point into China, which is Singapore. Multi-page transaction tests, not surprisingly, they only amplify the latency handicap. You can see here that we were able to do significant improvement for a prospect that was trying to serve the content from Singapore into China. A little bit more about off-site content. Yes, in fact, the Great Firewall is alive and well. It is still blocking some host names. It does result in some improved latency. You can see here that this application, which is only using 5 offsite or 6 offsite objects for 5 offsite domains, you can see that as they start improving the site more and more, that those become more of a leading factor. We have actually seen cases like this. You can see here where this first object is actually an offsite link for analytics. It took over a minute just to resolve DNS. Clearly not a good situation. You can probably get around the globe at least twice that I can think of. Actually, I'm sorry. You can get around the globe a lot more than twice in a minute. And as a result of this, we found out that we had to actually work with the prospect to kind of reshape how they were doing their site, and in this particular case, talk with a third-party vendor, because obviously your site doesn't work when you have these types of situations. This, of course, is a crazy extreme example, but it's not difficult to imagine how they can drive the overall performance. So now we're on to regulations. I think the Great Firewall is well publicized. The thing to understand about the Great Firewall is that it's not an option. If you want to be able to reach Chinese users, you should expect to conform to Chinese regulations. I certainly know that there has and continues to be a lot of traction around trying to evade or find different ways around them. As content providers, we do not have the luxury of hoping that our users will find creative ways around the Great Firewall. Not to mention the fact that the users themselves are largely in agreement with the fact that those filters be in place. You can see here that 84% of Internet users, so these are people already using the Internet, believe that the Chinese government should put some Internet controls in place. So don't expect that users will be so interested in your content that they will find ways to bypass around it. That's not going to be a strategy for success, certainly when you're a content provider. So when we talk about content types, what we're really talking about is the level of sort of agreeability with the censors in China. The ones at the top, fairly straightforward. The ones at the bottom, fairly benign, although we do run into occasional issues, particularly with some of the more, let's say, racy advertising, some of the advertising that we are more accustomed to in Europe particularly, but also in the U.S. That can get you into some trouble. And then you'll notice in the middle with high risk is user-generated content and news. And so it's probably worth spending a little bit of time about user-generated content. User-generated content includes things like comments, reviews about your products, things of that nature. The reason why they can get you into trouble is because they can be hijacked. So, and I don't mean this in a malicious way. Let's say that you are selling sweaters from Nepal. People are like, oh, I really like the sweaters from Nepal. It just takes one reviewer to throw in a little dig at the Chinese government or throw in a little dig about the political turmoil in the area to cause it to raise, to be flagged for review and or blockage. So really what you want to do here is, again, you want to look at ways to comply, not ways to circumvent. The ways to comply, if you're not already doing this, and I suggest you probably do it anyway, you should provide some type of moderation before you allow posts to go to your website. If not that, you're probably already doing some type of profanity filtering anyway, so you can contemplate adding to the lexicon to try and filter out some of the keywords that are going to cause your site to get flagged for review. So the blocking mechanisms, I'm just going to talk about these at a very high level. These are probably the three most common. My expectation is that the Chinese government is going to continue to get more sophisticated in the way they do this. They've certainly shown that propensity. But the important things to remember here are that the ways that they block look identical to any other internet issue. So you may believe that you're troubleshooting a connection timeout between the web server and the user, when in fact it may be due to filtered content. And again, the filtered content will look exactly like any other 500 or like any other connection timeout. So these issues can be very difficult to troubleshoot. We run into this issue frequently. Users have difficulty accessing content. It's not always easy to determine if a site is actually being blocked, because blocking occurs not just outside of, at the border between kind of outside of China and inside of China. And again, Hong Kong and Taiwan are considered outside China. But they're also blocked internally. So you can see a study here showed that 3% of the filtering that was occurring was actually occurring within China itself. So just getting through the Great Firewall is not going to be sufficient. Again, focus less on trying to evade and trying to circumvent, and focus more about being compliant. And what we're talking about is, in these autonomous systems, the filtering that has occurred is the ISPs censoring themselves. So just as we, as a company doing business in China, do not want to upset the Chinese government, the Chinese ISPs themselves also do not want to get in the habit of upsetting the Chinese government. And so as a result, they try to self-filter to remove a lot of those concerns. The problem is the ISPs have, of course, different standards. The agents themselves that are human agents, either the ones entering the keywords or the ones looking at the websites, will also have different standards. And as a result, you can have a lot of inconsistency in the filters that get put in place. Your website may work fine for a number of months, and then all of a sudden it stops working. Or, and this is something else that we see, is that there will be no complaints, and then all of a sudden users from a particular ISP will start complaining. And that's usually a fairly good indication that ISP filtering has been put in place. So in addition to getting in compliance, and that requires getting the right licenses and putting the numbers on, on your pages. And you can see here there's a, one of the bayons required This one was issued by the Beijing office. It's at the bottom of the government website. But number 4 is probably the most important. It's not sufficient to simply make sure you're in compliance at one point in time, get the licenses, and then go back to doing business. You have to continue monitoring for the possibility that some of your content could be flagged, or you have to rely on your users to do this for you. And I think most of us are aware of the risks of having users monitor your service. So what happens if you get blocked? Because of the subjectivity of the blocks, it is possible to get them removed. You can either get back in compliance if it's something that's obvious, or you can sort of raise the issue to the ISP or the Chinese government to get those removed. We have found that you are much more likely to be successful if you work through an agent than not, mostly because it's very difficult to understand the regulations, what type of issue flagged, what type of content to be able to get the filter removed. We have found that it is substantially harder to do that from outside of China. But nonetheless, those are pretty much the strategies to remove the block. A little bit more about licensing. Of course, the licensing is not easy. It's all written in Mandarin. There are a number of other requirements in order to be able to get to certain licenses. I've listed several of the most common ones on the right-hand side. As with anything, you'll want to have some type of local agent do this work for you. So just a little side note about that. I'm going to wrap up here quickly through some success stories, so a few minutes longer. These are customers that we have been working with to bring them into China specifically. Saxo Bank is a European investment bank that does global trading. Not surprisingly, you can imagine that it is a very low latency application. In many cases, hundreds of milliseconds can impact whether a trade goes through or not. You can see here that the 16 seconds with, and actually the error rate was fairly high as well. That just doesn't work. Certainly not for a trading platform. We were able to do a substantial improvement over that, as well as a very rapid deployment. So this is a case where we were able to do something very quickly and effectively able to open this market up to their platform. The next example is a company based in the U.S. They were reducing their IT staff and their kind of IT infrastructure. So not only were they able to reduce the download times, but they were able to significantly cut costs. And they were also having an outage issue. They were using a U.S.-based CDN that did not have China presence, and as a result, they were having a lot of problems with uptime. And the last example is a company, Thompson Online Benefits. Similar issue. They were having inconsistent performance around the globe, specifically in China. You can see the chart on the right. Yes, that's 78 seconds to load a page. In Shanghai actually happens to be one of the best internationally peered cities in China. So again, the numbers go up, kind of hockey stick from there once you start talking about the rest of China. And again, as you can see on the chart on the left, regardless of where the performance is, we were able to provide pretty consistent performance. So in short, try to provide you with a lot of information and a lot of the analytics that we have been able to gather, a lot of the experience that we've found working within China. Again, we found that it's not simply sufficient that you drop a data center in China. It tends to be much more, or it is much more complex than that. It is something to keep your eyes open for. There are other markets like that as well, Brazil, the Middle East, Russia. Again, due to peering issues, due to in some cases, some regulatory or governmental concerns, things of that nature, it's just not the same. So, as I said, hope this was informative for you. If you happen to be at Cloud Expo, please stop by and visit us. I'll be doing this presentation there as well, so you can also ask some questions real time. And then, of course, you can go to our website and pull up any collateral there. I do know that there's collateral available through this portal itself. Apologize for not being able to answer or ask for you guys to be able to submit any questions. We'll hand this back over to Sharon, and again, thank you for your time.
Thank you so much, Jerry, and thank all of you for joining us. Your CD Networks representative will be contacting you to see if you would like more information or if you do have any questions. If you have immediate questions, please email us at info@cdnetworks.com. Thanks again for joining us, and we look forward to talking with you.